Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today we will take a look at the euro currency. So on Friday it was a bit surprising action compared to the results that we have initially when the data has been released. So we saw the normal reaction because the payrolls were worse than expected, and in general the wages inflation also was lower than the market expects. But right now, based on the comments that I have read today, so it seems that investors treat the results of the non-farm payrolls release as sufficient and to support to keep the chance on rate increase in December. So that's why, although overall numbers were a bit worse, and we saw the indeed upward reaction that has allowed to complete our intraday target that we discussed on Friday. I will show you a bit later. But that was not as bad as it could be. That's why right after this first upward reaction, we saw the downward continuation. And right now on the euro currency, the situation not really very simple. It's a bit tricky because, guys, if you will read our weekly research, you will see that overall surround on the euro currency, it's not quite bullish because it has some barriers. First of all, we see a overloaded speculative position for the 3-4 weeks, and on the last week, based on the CFTC report, we see that the new shorts have come to the markets. So some bearish positions have appeared. Also, market right now stands in the nearest of the strong monthly resistance around 21-22 area. That's very important, it means that sooner or later, and probably sooner, some moderate retracement should happen. And currently, guys, this minor pullback that we see right now on the euro currency could become the first step of this retracement. But this moment is still unclear because if you will take a look on the daily chart, if we will not even talk about some setups and some patterns that we have on the higher time frames, on the weekly, on the monthly chart, even based on the daily. So take a look. The market has formed bearish divergence with the MACD indicator. It's very clear. And this divergence has appeared right at the strong monthly resistance. So in a longer term perspective, indeed, market could show this downward continuation, shows deep retracement. By our calculations, it will be painless if market will show retracement to the 114 area. So that is allowable retracement from the perspective of long-term bullish trend. So 114 is acceptable. But this will be enough to reboot the bullish sentiment on the euro currency. I mean, sentiment analysis on the CFTC report. So it will overload the positions that speculators right now have, and that also will be some reaction on the monthly resistance. So 114 area is quite enough to show this moderate retracement. But from another point of view, this overall upward action was standing on market. It's a very long period. It was really a long-lasting rally, and it has very significant bullish momentum. Here we see just minor bounce. Okay, and on the daily chart we've got the bullish grabber. That suggests that indeed market could show by this momentum some reaction to the upside, and could show some final leg to the upside. But here we still do not know whether this will happen or not. Now it's the question, guys. So on the first glance on the daily chart, we have a rather positive situation for the bulls, because take a look. We have the same bullish grabber, and it's still valid. That has been formed on Thursday. We, by the way, have talked about it in our Friday video. And also the lows of this grabber stands very close to the daily support area. So take a look at this 118.17 fib level. That's accompanied by daily oversold. It means that in the coming week it will be rather difficult for the market to pass through this area. But this is only for the first glance. If we'll take a look on the intraday charts. So first of all, take a look that our hand shoulders pattern has been completed on the hourly chart. So indeed, market has shown this ABCD action. This was the left shoulder and head. This right shoulder. This ABCD pattern has been completed, but simultaneously, market has formed Gartner's triple two sell pattern, and this drop was a result of this figure that we have on the hourly chart. But that's not the whole story yet. So we'll take a look at the 4-hour time frame chart. We see two side-by-side bearish grabbers, and both of these grabbers suggest the taking out of these lows. But that lows, guys, they are the lows of the daily grabber. So it means that if market will drop here, even will break for a while, for some time, this area will stand below these lows, it will tell that this pattern will be erased, and that significantly increases chances on the further downward continuation. So that's the major tricky moment here right now on the euro currency. Because potentially, if you'll take a look at the contracted chart on daily, that could be hand shoulders as well here. That could trigger the deeper retracement on the daily chart. That's why I think that it will be better to not trying to catch the moment for taking the long based on this grabber on the current week, despite how close market will be around will be to this area. Although it seems that's very strong and it's very good area for taking the long position, but I think that we need to see what will happen with these grabbers, guys. Because maybe market will form some clear bullish pattern here. Maybe market will form the butterfly a bit later within the week. Maybe some other patterns will be formed that could let us to take the long position more reasonable. So, for example, if some butterfly will be formed, the market will drop below these lows. Yes, grabber will be erased here, but market will be at the daily result, at the fib support, and some other bullish patterns could be formed. So my thought is that it would be better just to wait for a clarity what will happen with these grabbers, and only after that to make the decision whether it really is worth it to go along here or not. Because overall situation and reaction on Friday, it was not really quite reasonable based on the numbers that we've got. And that could confirm, relatively could confirm the some investors' worries and nervousness around, based on the factors and the sentiment analysis, that indeed there's no strong purchase power stands beyond the investors right now because everybody already hold long positions. That's why nobody on the other side could buy more and to support this trend that we have on the daily chart. That's why this could be this actually gets a reaction on this non-farm payrolls release. It could be some kind of the reflection of this situation. That's why I think that's better to wait what will happen with these grabbers. If any bullish patterns will be formed here, when in this case probably it is possible trying to take the long position with some retracement here. But in general, in the medium-term perspective, the chance on the moderate retracement, maybe even to the 114 area, increased significantly.